Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, report just came out from Altos Research.
Mm-hmm.
If you don't know who Altos Research is, they are the ones that we get the data from. We do market updates.
Mm-hmm.
So it's constant data. They pull that data from the MLS. They just put it in nice charts. Anyway, what caught my eye was the headline of the article. The strong spring real estate market will surprise you. That was certainly got my attention.
Well, so tell us how that got your attention, because I said it was going to be a strong real estate market in the spring.
They have data, and we just sometimes we look at our data, and then sometimes we're just looking at what's going on in Vegas. Okay. So I just thought that was interesting. Anyway, let's go through the article.
Okay.
There was a massive video that we watched that the president and CEO, founder of Altos Research did with all the data. Mm-hmm. So it's like if you watch how the Crash Bros do their video, it's the exact same thing, except for this is all facts, except for just a bunch of made up stuff.
Right. And it's interesting because he has all this data and he's good at compiling it and analyzing it. And he seemed to have a whole lot less certainty than the Crash Bros do.
Yeah, because remember, we don't know what's going to happen in the future, but we're looking at trends, and there's some interesting stuff, so we'll talk about that. Okay, here were 3 bullet points, kind of the first 3 bullet points from the article. Home sales are increasing every week, which is kind of normal this time of year.
Right.
That happens. Inventory is inching up. That's not unusual, okay? Home price signals are increasing too, meaning all the little leading indicators that show that which way home prices are going up. They're not showing any declines at all. We've had people theorize that there will be substantial price declines all around the U.S. Because 2022 didn't crash, 2023 didn't crash, it's going to crash now. This will be the year, 2024. Just watch my videos for one more year, and you will see the housing crash. And if it doesn't crash this year, it'll be 2025. So that's kind of where we're going with that. Okay, so here, we'll go through these one at a time. Okay, this was the first one. Sellers are coming back.
Right.
Okay, these are all the listings, the people that had their homes locked up that weren't selling them. There are 499,000 single-family homes unsold on the market. No, that's 2.75% fewer than last week, but 6% more than last year. Each week, inventory is increasing just a bit relative to last year. There's slightly more sellers each week. Now, you're probably looking at the national numbers going, there's more than this. This is only single-family homes. This does not include townhouses, condos, or co-ops, which you may have a co-op if you're in the Northeast somewhere. This is kind of good for us, like for real estate. Why is this good for real estate agents, real estate investors, and buyers, that there's more sellers coming onto the market?
Well, so for everybody, there's more choice.
Okay.
For real estate agents, more transactions. For real estate investors, more choice. For buyers, more choice. And at the end of the day, more choices and a healthy market are good for everybody. Right.
Exactly. Yeah. Real estate agents do more transactions. That's good for us. We get listings, which is good for us. We are starting to see some the phone calls and stuff. It's interesting because all of a sudden we're getting our investors that we already work with are saying, hey, we're ready to buy house number X. We're coming back. And we got a bunch of those literally this week. But we're also getting okay, now I'm ready to sell my house.
Right.
And that's more of a normal thing. No indication that the number of homes coming on the market will flood from any source. New home builders, from where else is foreclosures or any institutional sellers, right? We already have covered all that. None of that. We're not seeing any of that. It's just the normal thing, right?
Right. And I mean, we're still a long, long way from having a normal market of 6 months worth of inventory. Most markets have less than 2 months worth of inventory. I was having a conversation with somebody in the Northeast, in the Boston area this morning, and they're experiencing the same thing we are. They have about 5 weeks of inventory.
Wow. Okay. All right. So here's another thing from the article. Inventory growth is not spread across the country, meaning it's not the same.
Right.
Okay. It's climbing in the South and Central U.S., Texas, Florida, Arkansas, Louisiana, up through Nebraska and Wisconsin have more available homes to buy than last year at this time. Unfortunately, the Western and Northeast states have less available inventory than last year. Nevada, That's us. California, those are the guys right behind us. Arizona, New York, and New Jersey. It's going to be fascinating to see how this regional disparity plays out for the rest of the year. Juana, we know, being investors in, basically in this market and looking at other markets, that there are some markets where it's really tough. And the number of homes that I expect to come on the market this year is not going to be a normal amount. We did the market update. We just did it 3 days ago. Mm-hmm. The number of homes available, we lost 15% of homes in like 2 weeks on the MLS.
Right.
Meaning 15% more than came on. So the number of homes went from like 2,600 to 2,200.
Right. So we absorb more homes.
We absorb more homes. Where do you see that going if we don't really get a massive amount?
Like I said before, it's going to be an exciting spring, but I think it'll be an exciting spring either way. The less inventory we have, the more multiple offers we're going to have, and the harder it'll be for buyers to make purchases.
Okay.
Particularly in an environment where interest rates are coming down and people are getting more hopeful.
Okay, here's the next one. New contracts are up. What does new contracts mean?
That means new accepted offers.
New accepted offers. Okay, new contracts are up 13% more than last year during the first week of January. The sales rate has been trending up very obviously. I'm confident that we will see 15% more home sales in 2024 than we had last year. That's a pretty healthy growth, but it's easy from such low levels. That's absolutely true. From the lowest number of sales we'd seen in like 15 years, right? Were the last numbers. Total sales pending is 4% more than last year. The new pendings this week is 13%. Home sales are growing. There was this thing out there that interest rates were so high and no one would buy, and that would crash the housing market. But what our position has been, there's this pent-up demand, and the pent-up demand is going to come, and any inventory that hits the market is going to immediately get grabbed up. Mm-hmm. And that's exactly what this data is showing, right?
Right.
Yeah.
I mean, look, people have had their lives on hold for way too long, and people are just getting on with it.
Yeah. It's just like these investors, we have investors that were buying literally like a house a year and then stop for 2 years. Mm-hmm. And now they're like, now we're done. We're coming back.
Right.
To me, it feels like having conversations with people that everyone's over whatever happened the last couple of years, and they're just getting ready to get back into the normal thing they were doing before. The only difference is they have more cash now, because a lot of people have been just like sitting on cash, sticking it in these mutual funds that pay 5%, money market things.
Right.
And now they've got a bunch of cash, and they're like, let's go out there and buy some more properties.
Exactly. Yes.
Okay. Here's another quote. This goes under the leading indicator.
Okay.
Price reductions are dropping.
Mm-hmm.
Meanwhile, price reductions are dropping rapidly. Each week, fewer home sellers need to drop their prices. Currently, 32.8% of the homes on the market have taken a price cut. That's 200 basis points fewer, 2%. Mm-hmm. I don't know why people do that. It's 2% fewer than last week. So it's 35%. It's 32.8. There are fewer price reductions because there's more fresh inventory, and more of them are getting offers. That's the sign of a hotter market.
It is. The other sign of a hotter market is something I've been running into quite a bit. Sellers and buyers negotiating more personal property, which I think is kind of interesting.
Wasn't there something I heard, like, I've heard a boat.
Yep.
I've heard a car.
Yes.
Furniture is normal.
Yes.
Tell them the stuff people are throwing in. And this is not because they can't sell the home. These are super high-end people that are just like, I've got a boat. It's sitting there. I don't want to really sell it.
But it's not even super high-end people. I mean, we're talking about homes that are under $1 million. And they'll throw in a boat. And you're thinking, why would they do that? Well, because they don't want to move it.
Right.
So in this particular case, the boat is over here in the lakes, which it sounds like a massive body of water. It's not.
But it's a boat for the lake,
right.
The little lake.
Right. Yes.
You have to sell the boat with the house.
Right. So it's a little party boat.
Okay.
It's a little party boat.
The lakes is a community we live in.
Yeah.
If you want to go Google the lakes and look at the map, what it looks like, it's basically like this lake. It's a small lake with like some couple fingers, and there's a bunch of houses right on it. And if you live in a house on the lake, you have a boat, but you can't really go anywhere. You can just go in the lake.
Right.
So it's kind of ridiculous. If you sell the house, you pretty much have to sell the boat with the house.
Right. So they'll do, okay, well, instead of repairs, I'll just give you the boat. Well, the boat is worth like, $2,000 or whatever. I don't know,
Right.
$5,000, whatever it is. It's not worth a substantial amount of money. But it's just kind of funny to watch this. But it is very common, especially in the high end,
Okay.
for homes to be turnkey in the sense that, that they will leave the towels, they will leave everything.
Right. Okay.
Because these are not primary residences. These are second homes. People don't have any use for anything in that house because whatever new property they're buying, they're going to start fresh anyway, and so they leave everything.
Okay. Here's another leading indicator, small spike in new listings.
Mm-hmm.
After the first of the year, we always see early price signals with the price cohort of new listings each week. Sellers have waited over the holidays, and they start hitting the market right after New Year's. If they have buyers, the price of new listings spike up quickly. Mm-hmm. You can see it most dramatically 2 years ago at the peak of the pandemic buying frenzy. The bright red line price of new listings spiked up quickly after January 1st won it. North Las Vegas, 3 weeks ago,
mm-hmm.
the median price of new listings in North Las Vegas was $399.
Mm-hmm.
And 3 weeks later, which is right now, $444.
Wow.
Okay. Now, the reason why I know that is because somebody said when we did our Las Vegas update where we showed home prices had gone up over 1% in 2 weeks
mm-hmm.
by sales price.
Mm-hmm.
But Todd, that's just Las Vegas. If you include the rest of the area, I mean, it's just terrible, the rest of the area. And so I did. I looked. Henderson, exact same numbers, up $3 per square foot, which is over
mm-hmm.
1%. And then when I looked at North Las Vegas, it was similar. It was like just under 1%. But because it was up $2 a square foot. But what was interesting was that jump in new listing price was substantial.
Mm-hmm.
That's a huge leading indicator. And we're up too. We were up and Henderson was up. Everyone, for the last 2 weeks, the price of the new homes coming on the market is up. Now remember, that could be because just more higher end homes are coming on the market.
Mm-hmm.
That's what you got to be careful with. But I just thought that was interesting that was like this, like you could see what's getting ready to happen January, February, March,
mm-hmm.
potentially.
Yes.
Okay. All right. Here's the next one. This is actually the last one. The median price
mm-hmm.
is strong. The median price of all of the single-family homes in the U.S. is $418. Now, remember, that is more than it was in, I think it was March when it broke 400,000, March of 2022, so 2 years ago, okay? There's enough strength in the pricing signals that look like the spring will pass the all-time high from June 2 years ago. Because remember, it jumped up to like 424 just for 1 month and then kind of went back,
mm-hmm.
okay? Like inventory, the home price appreciation is the 3 to 5% average across the country, but it's not the same everywhere. Some markets are still down for the pandemic peaks and haven't found the bottom yet. He's literally just talking about Austin. Maybe Vegas isn't back. We're up 8% from total and 6.1% in 2023. I predict that by the spring we'll have far eclipsed, one of these markets he's talking about, we will have eclipsed whatever it was in 2022, mm-hmm. which meant when we said the market would moderate, we called exactly what was going to happen, like we had a crystal ball, could see into the future.
Okay.
Right? Okay, all this comes from Mike Simonsen. He's the president and founder of Altos Research. Happen to know him, see him at conferences and stuff like that. Super smart guy. Altos Research. They do have a blog, so to speak. They get quoted a lot. He's an industry expert.
Right.
But they have pretty good data.
Right, and they have a subscription, so you can buy into their platform and get all their data. So if you are really into that, then you can go ahead and do that.
They have every market in the country. You can literally, not only the way it works is you can so what we can do is we can put in Las Vegas, or we can just say 89135. Mm-hmm. And we can look at exactly what's happening in 89135, right. which is more discrete mm-hmm. than Las Vegas, which, as you know, Las Vegas, some parts of Las Vegas are would be like the Ridges, super high-end, multi-million-dollar homes, and then some parts are homes built in the 50s right. that are really small, and they're, more, say, central or further on the west mm-hmm. or further toward the Strip and stuff, and,
right.
Call them entry-level homes.
Yes.
Yeah.
All right. So hope you enjoyed the video. Please remember to subscribe, hit the notification bell, like the video, share the video. Leave us your real estate-related comments. Give Todd props on his outfit. He looks very nice.
You got the
That's right.
raw silk. My 30, I think it's 30 years old.
There you go.
Yeah, 33-year-old jacket still fits really well.
Okay, well, it's the only thing that's 33 years old at this table. So I hope you had a good time, and we'll see you on the next video. Bye.
Bye.